Well. Welcome back to Renewable Energy Investments. So renewable energy stocks are once again out of favor. The all-knowing Wall Street has apparently decided all renewable energy companies are untouchable, and I absolutely love it. But is it time to buy? For me, personally, we are certainly in the buy zone. In fact, I've been buying for the past 6 months and still continue to add more to my positions. Right about the time renewable energy stocks crashed due to elevated interest rates was exactly the time I got extremely bullish. In this video, I'm going to share which renewable energy stocks I've been adding to. But before I do, I would be remiss not to acknowledge it has been quite some time since I last uploaded a video. I just wanted to say I hope everyone is doing well, and I certainly missed you all. And I wanted to give a quick update on my portfolio. So as you all know, I'm a long-term investor who likes to buy great businesses with secular tailwinds and hold them for the long term. So I created a new public portfolio in September of 2023, which I will be debuting in this and in future videos. It is a concentrated portfolio of leading companies that I am comfortable concentrating large bets into. My intent is for this channel to serve as a diary and record keeping. But without further ado, stock number 1 that I was aggressively buying is NextEra Energy Partners. Many investors are familiar with NextEra Energy, but most typically buy NEE instead of NEP, including myself. But when I saw NextEra Energy Partners drop to an all-time low of under $23 a share late last year, I bought into NEP fast and heavy. I jumped the gun just a bit as it ended up dropping to just about $20 a share. But I felt urgency to build my position out with a quickness, so I did just that. Let me tell you why. In case you don't know, NEP is what people often refer to as a yieldco. Its business model involves issuing shares of its own stock to the public to raise cash, levering up with debt, and using that cash and debt to build out massive utility-scale solar and wind farms. Then, it sells the renewable energy it produces, typically to investment-grade companies, generating a stream of monthly income that it returns to its shareholders in the form of quarterly dividends. That business model works wonderfully in low-rate interest environments when the company can easily generate returns from these renewable energy farms in excess of its cost of capital. This is how NEP was able to raise its dividend by about 15% each year since its inception. But when interest rates rose, NEP was hit with a double whammy. Not only was its interest expense rising, but its stock price plunged. Now, NEP's cost of capital is so high that it is not economically attractive for it to issue new stock and debt to build out new solar farms. Thus, NEP issued a statement that instead of growing its dividend at 15% per year, it would only grow 6 to 8% per year through 2026. The very next day is when the stock price absolutely cratered. This is when I jumped on in, as I saw this as an almost unfathomably fantastic buying opportunity. With the stock price this low, the dividend yield was super fat, about 15% per year. But more importantly, the stock price being at an all-time low meant I was buying into the existing renewable energy farms at a large discount to their book value. After all, NEP had been issuing shares for the past 5 years between $25 and $90 per share, and using the proceeds to build out its renewable energy portfolio. So I was buying into all of these farms at a massive discount. And I do believe that one day, sooner rather than later, the Fed will cut interest rates back down to around 3 to 4%, at which point NEP's business model will come back to life and the stock will fully rebound. In the meantime, I am a happy owner of the discount renewable energy farms, and I am paid a fat dividend to wait for the rebound. I think the stock price will regress back to $60 a share minimum over the coming year or two.
Moving along, stock number 2 I've been buying is NEP's parent company, NextEra Energy. After I bought in aggressively and fully built out my NEP position, I couldn't help but begin to also buy NextEra Energy, its safer yet still very discounted parent company, which sold off in sympathy with NEP. NextEra Energy is a much higher quality business overall, as it is the largest renewable energy company in the world, complete with solar, wind, natural gas, energy transmission lines, an AI data analytics business, and its steady utility business, Florida Power and Light. I'm very happy to pay up for this quality business because it has multiple competitive advantages over its competition, including decades of renewable energy know-how and data, a top credit rating, and economies of scale. Smaller, less sophisticated companies with a less robust balance sheet and less data simply cannot build out renewable energy farms as efficiently and as cheaply as NextEra can, which is why I believe NextEra Energy will remain a high-quality compounder for many years to come as the world transitions to renewables. I'm looking to continue to build out a bigger and bigger position if it drops back under $60 a share. Anything near a 15 price to earnings multiple for this predictable compounder gets the green light from me. The third renewable energy stock I've been buying is none other than Tesla. I'm very excited to buy more of my favorite stock. I intend to tranche into Tesla if and when it sells off, or continue to DCA at these levels. I'm sure you are aware of the bull-bear debate surrounding this one, so I won't waste time with my full thesis, other than saying my time horizon for holding Tesla is 2030 minimum, and I am a long-term, extremely bullish, given Tesla's FSD, superchargers, energy business, and bot prospects. Like other OG Tesla shareholders, I've been riding the ups and downs of this stock for over a decade. And with my robust knowledge of the history of Tesla stock, I simply refuse to play short-term games with this stock. The super volatile FUD-laden drawdowns and the FOMO melt-ups are simply a cost of doing business in Tesla stock for me. The fourth renewable energy company I've been buying is another YouTube favorite stock. It's Enphase Energy. Similar to Tesla, I'm an OG shareholder of Enphase, and this isn't my first sell-off rodeo. I am very excited to buy more at these levels, and hopefully much lower. I don't believe I ever shared this, but Enphase is my highest percent gainer stock ever. I rode it from $4 all the way up to $300, and back down to $80. Why? Because I don't think $300 is the top. This stock took a fat dump once interest rates were lifted above 4.5%, as such high financing costs really put a damper on new renewable energy projects and demand for Enphase worldwide. But as soon as rates come down, 50 to 75 basis points from where we are today, I expect a violent rebound as Enphase's microinverters are the best in the business and their battery storage and other product lines are poised for a coming out party. To me, the potential rewards of a rebound boosted by the Inflation Reduction Act and cheaper solar panels far exceed the risks of competitive pressures. I'll gladly be averaging up my cost basis in Enphase in anticipation of another bull run over the next couple years. As for stocks number 5 through 10 in the public portfolio, you'll have to stop by again as I'll be covering them in a separate video. As a teaser, my highest conviction stock is a financial, while my largest stock position has a very large renewable energy line of business, although I wouldn't quite classify it as a renewable energy company, so it's not featured in this video. Do you have any guesses? I will say the portfolio is full of some of the largest, most dominant companies in the world with great potential. So there we have it. Those are the 4 renewable energy stocks that I've been scooping. Until next time. Later.